Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for a bloodbath day, as I want to call it, in the futures markets at least. And this is Thursday, and we are now at 5:35 p.m. on the 17th of June, 2021. Let's talk a little bit about what this was. I went through great length last night to explain the concept of yin-yang, which means when we get a report, a major report that comes out in the U.S. afternoon time, if you think about how the world works, in Asia, it's the middle of the night. In Europe, you're already, if we get a report out and the Fed has a meeting and it ends at 2:30 Chicago time, that is already 7:30 to 8:30, depending on where in Europe you're at. And people there, they're out there having dinner. They're not sitting doing their trading. The yin happens when the market and the Asian markets get to see the report as traders wake up and they're looking at it and they're seeing the action in the U.S. The yang, the back and forth part could be, oh, they agree with it, nothing happens. They disagree. They think the market read it wrong in the U.S. They're going the other way. Europe either confirms, rejects it. So what happened in this case is Asia looks at the market, they start putting pressure on, they agree. Europeans wake up, they go, oh my gosh, look what's going on there. We can't withstand that pressure. They add. The U.S. people wake up because, yes, we do sleep, believe it or not. And you go, oh my God, I don't like what's going on. You start adding to the selling pressure. So soybeans down $1 today, corn down 40 cents today, soybean oil down the limit 3.5 points today. It's market after market. Palladium down $325 an ounce today. Gold dramatically lower. 20 some odd. You'll see it in a minute as we get all there. I've done it on silver. Dollars, couple of dollars break there. Copper, 20 some odd cent break today alone. Today. So you're back to 418. You got it down under 26 here. You were at 1920 in gold just a short while ago. You're back into the 1770s. Okay. So you're taking out the longs. The shorts have got to decide where do they cover. And the game starts fresh. I believe you don't go into these reports as a trader. You've heard me say it. It's like a speed train coming down the track. I can't jump fast enough. I don't want to jump that fast. I tell my clientele, I have a standing policy. I broke it last month in corn, and I promised I'd never do it again on half a position. And slap me in the face. I won't do it again. This year. I might screw up again next year, you know. No. When you look at the S&Ps, you're not down very much. Okay, for the week, you're down 0.5 percentage point. Oh my God. It's not the stock market that's getting hit. It's the commodity market that I don't think most people saw coming. When you look at the S&P here and you look at the pattern, you got a higher high and lower low. There's no trend on that. Where's the battleground? How many times have you heard me say that 18-day average of closes will prove it? At the end of what I'm talking about tonight, I have my charting course. Hang around, let me explain how that works, and you might get something out of that. Here's where you're fighting the battle. The market is looking for direction, but it's directionless on the daily chart right now. The market's caught within the upper and lower Bollinger Bands. This is that psychiatry move you hear me talking about. Is it does this and you're going, why isn't it breaking out? Why isn't it dropping? Here was all the news I needed to be bearish. Here's all the news I need to be bullish. Why isn't it following through? You think we don't hear this from people? It's being a broker is like being a psychiatrist. Momentum down, flat action, caught in the Bollinger Bands. Other things to do. In the NASDAQ, this is where the market's decided that everything's right. They're buying the tech stocks like there's no tomorrow. That's what the market has decided. It kept its bullish embedded reading, number one. After yesterday, this was the pullback. Let's get to Wednesday. If the market rallies, I don't know if it will or won't, but it hasn't lost its embedded reading. If it doesn't lose it, a target is the upper Bollinger Band. You went there today. You should back away from that a little bit now. What about the Dow? The Dow had lost. First of all, it was never embedded. It's oversold. And it got down yesterday under and I'll come here to Wednesday, under the Bollinger Band. You got under it again today. This market's going to fight starting Friday through Tuesday to get back up to the right side and inside of that. Beyond that, I don't know what it'll do. It is not even trying to embed, which tells me I think it's going to do what I just said. But again, it's caught in this psychiatry move. It's trying to break out. Did it? Yes. You have a breakout because yesterday, the way that I chart and teach it, you closed in the bottom quadrant of the day under the Bollinger Band, and again today. So until 34,711 is taken out, I think for quite a while here you're going to have aggressive selling as you get back into the market over time. In the Russell, once you lost the embedded reading, the market theoretically, here you still have it, theoretically, now it should target the 18-day average of closes. It did it, and that's where you're at. It hit it today. This is tonight's trade. VIX cash, I said if we rally, look for the resistance. If you have my morning subscriber video, I'm looking for resistance between the Bollinger Band and the 100-day average. Could it blast through it? Of course it can, but that's not what it's looking like. Went up today, and you can see, at least the concept is there. Then I get to the bonds. I don't get it. I mean, I'm shocked that from what the Fed said, that the curve yield is absolutely flattening itself out dramatically. The back end where everybody was buying, oh, we're going up, 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 and those long-term rates is down, down, down. You don't need me to tell you that. Look at the futures. It's an inversion market. So the higher this goes, the lower yields go. What went up are the 2-year, the 5-year, because everybody thinks that you can't see my foot, but the Fed's going to take its foot off the gas pedal. They're now saying that they expect that Jackson Hole, the Fed will announce that it's going to start tapering its bond buying program. That seems to be the market guru saying that. I haven't the slightest idea. Here's the 10-year. This has still got the 10-year about unchanged on the day. Didn't do anything. And then today, the day after yesterday, it actually lost yield. You went higher. So now I take a look at the dollar index. The dollar index is saying, hey, the short-term rates are going up. That impacts me. Up and away I go, and you can imagine what it does to the euro. Smashes it. So go to Europe now if they'll let you in, and instead of you paying 122.5 euro, and that's pretty high price, you're back to 119, and I'm hearing people talk 117. Go to Europe. Enjoy yourself. In the British pound, I'm looking for support right now, right here, against the 100-day average to the Bollinger Band. Am I bullish? Absolutely not. If I were a bear, would I be covering? Absolutely so. You're down to the zones that you've got important areas. What about Bitcoin? Well, where did you fail? Take the enhanced Bollinger Band course. Here's the market coming up. What do I teach? The first challenge of a Bollinger Band. Take your money and run, and all of a sudden you're back here wondering, well, why is that going on? The differential between Brent and WTI. From everything I'm seeing, I think that we're, in America, going to see tighter oil prices due to a crazy policy that President Biden has put in to make us more dependent on foreign oil. It's nuts. I'm not criticizing him, but I am. You know, I might as well just say it. Doesn't make any sense. There's got to be a way where instead of us putting back, we're not going to give up the oil, right? And we're not tomorrow building more of those wind farms or those solar panels. So you want to take us off today so we have to buy more foreign oil, and that's your policy? I don't know what's wrong with me, but something is. In any case, I think you're going to see this differential keep tightening between the two over time. I was looking for a pullback, and you got the lost embedded reading finally in the Brent, in the WTI. For the moment, the game is over. That's fine. I love that the game's over. When a game's over, guess what happens? You go out, you wash your face, you get ready. It's just like a marathon poker game, you and your buddies. I'm going to eat now, and we'll see you guys, and we'll play again. And that's what you're at. You're at the we're going to play again stage. And if you're going to play, learn the game. I teach 5 indicators that make up a game plan. Does this mean you can't add to them on your own? Absolutely not. But each of the indicators I do, it starts with the swing line. What is a trend? How do you measure it, and what's the risk associated with it? And then you start the filters with moving averages, momentum, the slow stochastic. This is the basics of it, not the enhanced course, the basics of it. Bollinger Bands, how do you use them? My enhanced Bollinger Band course, another one of those. And then, of course, you want to know, because you don't always hit a Bollinger Band, where are the standard deviations, called a window envelope, from the 18-day average, the line in the sand. 54 videos, 8 hours of them. It's not a contest. Here's what I learned when I went to school. It took me until my latter years of college, and I kept going to college. I mean, I have a lot of college, believe me. And to make a long story short, I even went to law school. So you keep going, and I learned how to study. And studying isn't going through the book, oh, like this, I'll read it, and I'll read it, and I'll make a note and come back. Before I turn a page, or before you finish a chapter, make sure you understand that chapter. If you don't, go back. Don't leave that chapter till you get it. Then go to the next one. This is not a marathon race. I want you to learn. If you go through it the way I just said, guess what? You're going to get it. If you race through it, I'm going to get the concepts, then I'll come back. Nonsense. That's the way I'd like you to do it. And it's not going to take you long. You're going to be shocked how fast the time goes by, and all of a sudden you get it. And then every morning, you're going to get my research, which twice a day written reports, and in the morning, my morning video. That reinforces everything. So I don't care if the video you want to look at, and I'll give it to either one you want, out of my research, is the Spider ETF video or the futures one. I want you to learn, and I want you to learn the way that you're comfortable in learning. So as you do this, we'll throw those in, make sure that you get it in your research package, and away you go. How do you get it? Well, go to our website under the word education. It's that simple. Take a look at the charting course. I've done a video there for you. Everything's explained. It's inexpensive. It's summer. Take the course, learn. I'm Ira Epstein. Have a great day.